let's get started. Okay, before we get on to those papers, I want to talk about this paper. This is by Steve Sutton, who came last week, right? And he was editor of this International Journal of Accounting for Systems. I think he was the founding editor of this journal, which is one of the leading AIS journals, right? And he wrote this paper which is talking about the scope of AIS, right? And he starts by pointing out that 20 years earlier, he had written another editorial asking, what is AIS research? All right. Now you may ask, that's a strange question to ask. Nobody asks what is accounting research and so on. But the reason he asked that question was that AIS, because it is not a subject area or a methodology, tends to fall sometimes in the middle. All right. Meaning that, so you look at AIS, right, and it has two components, accounting and information systems. Now, information systems is a discipline, a well-established discipline in business schools and so on, right? So our school has a department called MSIS, Management Science and Information Systems, all right? And so some people say, look, if information system is simply a methodology that is applied to accounting, we don't need that in accounting. We can just go to AIS and get people to come and do it, right? Now, to some extent, that has been validated by the fact that Kevin Moffat and this new lady who's been hired are coming from AIS, right? So what they're saying is, they bring their knowledge to apply to accounting, okay? And so there's this whole issue of, if here is AIS and here is accounting, all right? Where does AIS fit into this? All right, so is there like some overlap? Is this AIS, right? Should it always only be in that, or can AIS be broader and so on? Now, to some extent, you might say this is just a sort of, as they say, inside baseball kind of discussion, right? But obviously, if you're an AIS student, it is of importance to you, right? To understand, for example, where you go to get a job and so on and so forth. All right, now. Right, so he says I pose these 4 questions, all right, and AIS suffers from an absence of identity, right? Too many AIS scholars researching in areas other than AIS, too few researchers, and too much AIS research lacking appropriate academic rigor, all right. So what does he mean by that? This is where he talks this whole idea of whether you really should be in accounting or not. I mean, remember that the vast majority of accounting programs, including every single one of the leading accounting programs in the private schools, none of them have AIS, right? So that might tell you something. You could go to Harvard or Stanford or Chicago and you say you're from AIS, they would know what the hell that even meant, right? They would have no idea, all right? Too many AIS scholars researching in other areas other than AIS. To some extent, that is still I don't know if that's a big problem now, all right? But this certainly is true. Too few researchers driving the discipline, all right? So you go, you look at how old Miklos is, or even to some extent how old Alex is, right? And and you ask yourselves, where's the young professor? Now here there is in fact some more young professors coming in, I suppose, all right? But still, they are not. It's not like you have hundreds of these people floating around. All right, and this is what I was talking about, too much AIS research lacking appropriate academic rigor. This is something Steve feels very strongly about. He says, especially if you go to Europe and look at the conferences there, and you look at the papers, they are really poor, right? They really are not rigorous enough, all right? In any case, he says, today I think this is not true, right? That things are looking a lot better in the last 20 years. And he goes and gives various explanations for that. But then he says, here are some of the problems that we face, right? And that's worth looking at. Okay? So he says, here are some of the reasons why I'm not that optimistic, all right? He says, look, the AIS research has increased in both quality and relevance, all right? It should not be assumed that these gains equate with our disciplined scholars and scholarship being on safer, sustainable ground. All right. So we say today we see many scholars that have been viewed as leaders in AIS shifting their research away from AIS scholarship. I don't know who those people are. They say, if I am honest, I would have to agree that this is the best strategy for their personal career. And this is something that is, I think, really important, right? Because what he's getting at is this whole issue of tenure, right? How do you get tenure if you do AIS, all right? And the answer is, if you only do AIS and only publish in AIS journals, right, at a school like Rutgers, you will not get tenure, all right? That's just the reality, all right? Because at a school like Rutgers, to really hope, you need 2 A's. Okay? Now, I will show in a minute that in fact you can do AIS and get published in A journals, right? But it's not easy, that's for sure, right? Now, of course, for anyone publishing in A journal, it's not easy, right? I mean, it's a damn difficult thing to do, but that's why they are A journals, with their 90% rejection rates, right? But nonetheless, you have to be very skilled, like that Lee fellow was, to be able to publish in A journal. And so his real concern is this issue of tenure, right? Okay, and that this is not good for AIS research. That is actually changing since this paper was written. I will discuss that in a moment. All right. So, in any case, the point he's making is that AIS research is doing better than it was 20 years earlier, but serious issues remain, right? But there is something here also that he says. Right, it says here, the above has been premised on the assumption that the maintenance of an autonomous research discipline is a normative solution. All right. However, little of our research is framed outside of audit, financial management, or tax. If these other disciplines embrace the right environment, then much of AIS research be absorbed by disciplines. What's he meaning by that? What he's saying is, look, the reason that this group of people pull themselves out and call themselves AIS was because they said, look, most other accounting researchers have no clue what technology is. Okay? Right? I still remember at a seminar, this chap, presumably a well-known professor, came from Wharton and he presented a paper on control systems, as it turned out. Right? And I asked him a question. I said, look, this today most control systems are built into the company's ERP system. How does that affect your model, right? And he said, ERP system, is that earnings response? Right? So I said, never mind. But the point is, there are people like that, right, who have the clue how the world is organized. And that's because they are so focused upon their publishing and accounting that they don't care about the real world, right? So yeah, SAP, XPR, I mean, there are people here, right? Talk to faculty today here, right? And they have no clue what XPR is. Even though capital market, the data they are using now is XBRL tag, right? But they don't care, right? I don't care. I mean, who cares how it's tagged as long as I get the data, all right? So, right, what he's saying is, as long as that was the general attitude amongst researchers, all right, it made sense for us to pull out and call ourselves AIS and say we are going to talk about technology in a way that other people aren't, right? But what he's saying is, in theory, you could have a situation where the people in these mother disciplines, auditing, capital markets, tax, or whatever, they also realize the value of AIS, and so then they also start using and looking at technology, at which point there is nothing to be gained from having a separate group of people who are interested in technology, right? I don't think we're there yet, but nonetheless, that is something that you see, as I mentioned, with people like Lee, right, who are absorbing technology into their mainstream research, and therefore they don't need to call themselves AIS, right? So that's one of the issues that he's raising there. But now let's look at some of these papers that I want to go through, all right? And like I said, every paper here has been published in the A journal. I just want to talk about how that was done, right? So here's one of the oldest papers in 2008, Accounting Review, all right? And the key person here is this person, right? He's the lead researcher, right? Vern Richardson. Now he actually came, I think, to Rutgers, I don't know, recently, sometime, right? And these, I don't know who these people are. These may well be his students. Not Kevin, he's another professor. But these are a lot of PhD students. Okay? And Vern Richardson, the University of Arkansas, he was recently the president of the AIS section of the AAA, but if you talk to him, the first thing he says is, oh, a lot of people say I'm not accounting AIS. Right? I think it's a sort of false modesty, but anyway, maybe he really believes it, right? Because he has published a variety of papers in these A journals. All right? Now you will see that the word technology is actually in the title, right? So that's good, right? That's good. It shows that there is a role for technology AIS in these things. But if you go and look at what he actually does, okay, right? What he does is he runs he runs this. What is this? Right? This is the capital markets regression. Okay? And so what he has been good at doing is to say, you could say that he's doing AIS with capital markets, but actually I think it's more accurate to say he's doing capital markets with technology. Because one of the issues with capital markets, right, is that models have been beaten to death. Every conceivable variable you could think of has been tossed into a regression, right? And so what he figured out is that you could look at some of these standard capital market models, like for example this one here, which is on performance, right? So here's the performance of the company, all right? It's based on lags and advertising, usual stuff, residuals, and so on. But now a new variable I can put into this regression comes from technology. All right? And in this particular instance, it is the budget for IT. All right? So we got data on the budget of IT of companies, and he said that I can use to help explain performance of a company. Right? So you might say it's a capital market paper with IT variables. Right? But as a result, it was published in Accounting Review. Right? So that is one strategy. Right? Now, so I don't know, Steve Sutton in his paper might consider this a researcher leaving AIS, right? But I think it's perfectly legitimate, right? I mean, we are in AIS, the focus is on technology and accounting, and he's showing that technology impacts accounting. So, I mean, what more do you want, right? So, that's one approach, okay? That gets you into these A journals. That's not the only paper is written. There's another one here, in also Accounting Review in 2010, right? Again, technology here, all right, and here he is, and these are his students. I don't know about him, but I know he's one of his PhD students, right? So he's very good at working with other people, all right? Okay, but again, right, what he does here is he looks at internal controls, all right, and use of technology, and he gets data, right? Regression here, the sample selection, all right? And so he looks at internal control weaknesses, right? He gets some data on it, and here it is, right? So this comes from SOX 404, the weaknesses, all right? And he models it using internal control weakness. The point is, it's like a capital markets paper, but he's got a role for technology, okay? And if you're the first person to do that, you're going to get it published, right? So because, in other words, instead of falling into a silo saying, this is AIS, right? Okay, because if you do that, especially in these earlier days, one of the problems was you submit it to the Accounting Review, right? And the editors there are all capital markets people. Right, and they say, I know nothing about your area, send it to an AIS journal. Okay, so you have to have a hook to get these people interested in it. So clearly here, this comes across as a pure capital market research, but with some interesting, unusual variables related to technology in it. And if you write it up well, right, you can get into it. Right now, subsequently, not only did he get published in Accounting Review, he became an associate editor of Accounting Review, right? Because the editors at that time were under tremendous pressure, and people were saying, look, they only publish capital market research, but AAA has all these other sections. They should also have a chance to publish in Accounting Review. So Vern was one of the editors brought in to look at AIS papers, right? And he played a role in publishing some AIS papers in it. But this is one approach that's been done here, all right, to publish there. Okay, and this is the kind of model that people who were doing XBRL research were trying to follow, right, where you try to replace some of these technology variables with some XBRL variable, right? But see, the point is, Vern is a really good capital markets researcher as well, right? Who also happens to be interested in technology. So he can do the work as rigorously as any capital market researcher and write it up as well as a leading capital market researcher. That's what's really important, right? Because otherwise, you end up with that kind of shoddy, half-baked work that Steve Sutton was talking about. Okay? So it's very important that you do it well if you want to follow this strategy. Okay? Now, let's look at what so Levy already talked about. Now let's look at some of the papers by Steve Sutton. All right, now this is not published in AIS, right, in accounting journal at all. It's published in MISQ, or right, in Management Information Systems. Now this is an A journal, a highly respected top journal in information systems, right? But of course it's not accounting. No, that's not to say you wouldn't give up a chance to publish here if you could, because this would be considered very highly for tenure, right? But this is an example of going outside the AIS field, right? But nonetheless, it's an A journal, all right? And this is a sort of experimental method, right? And it's interesting to look at what they do here, right? So this is like an experiment, right? Where they get people in, right? And give them some variation of technology, and they try to explain their reactions, all right? The reason I mentioned that is because for those who were in the AIS seminar last week, you're going to see something very interesting, okay, which is what this topic was. Right, the research method. All right, 80 insolvency professionals. Right. That might strike you, those who was in the AIS seminar last week, is familiar. Okay, what tool are they using? All right, they are using something called the Insolve system. Right, that's exactly the same tool that Steve Sutton was talking about in the paper last week. All right, so they developed this tool. They were paid to develop it by the Australian, research people. All right, so they developed this computer-based system to help insolvency experts, right? An expert system, in other words, or artificial intelligence, right? Which they have kept developing over the years, right? And they use it over and over again to do research. All right, so they bring in people, experts, or who use this, and they see different versions of this system, and they compare these different versions. All right, and what's the underlying theory? All right, what's the underlying object is to look at this issue of whether you're a novice or you're an expert, whether you get feedback in advance or after the event. It's very similar to what they were talking about. All right, and they right, and they cite various papers from psychology, right, as the theoretical underpinning for what they're doing. Okay, and you will see that over and over again, right? So they have so they have developed a tool, right, which can be used as an experiment. They bring in participants who are from who value that tool, insolvency experts, and they have a theory about what underlies the experimental variation across this tool. Okay, and that got published in a leading A journal, right? Not a accounting journal, but nonetheless a leading A journal. Okay, so as you can see, what he talked about last week was a continuation of exactly the same line of research, with exactly the same tools, similar participants, and so on. So, putting that effort into developing that tool is something that's given them rewards for years and years and years and years, right? Okay, right. So that's something very, that's another approach you can take, right? So this is experimental research. Let's look at, that was in 2006. Right, here's another paper by Steve Sutton and various people. All right, Okay, so it's a long, heavy-going title. But note it's published in Accounting Review. All right, the role of organization absorbs the capacity, etc. Right, now you note here, I didn't even say accounting information systems. Yeah, you note here, right, they have an enormous number of keywords. I've never seen so many keywords on the page. Normally you only have 3, right? But not one word there is accounting information systems, right? Okay? So despite what he's saying, he's also playing the game, right? Management control system, management accounting systems, you're much more likely to get published if you are doing management accounting, which is an established field in accounting than AIS, I suspect. All right, so they know how to set this up. All right, so what they do here is they're looking at business intelligence systems, okay, and the effect it has on various aspects, things like this absorptive capacity of an organization and so on, right? And the point is, these are not just words they made up, and this absorptive capacity, there is a theory underlying this concept, which they're going to test, okay? Okay, and so there's introduction and various things, all right? Let's just jump forward as usual to the theory, all right? The adoption of enterprises that been studied, etc. Here, conceptual model of BI assimilation, right? And this model comes from Cohen and Levincard and Zara and George. All right, so in other words, there is some established theory out there relating to this absorptive capacity business. All right, and they say I'm going to test this, right, using my methodology. Okay, and what is the methodology? The methodology is pages and pages later. We jump to the research methodology. All right, it says here, right? This was a survey-based method. In other words, they mailed out a survey to people. Who are these people? The survey was distributed to Australian clients of a single international vendor providing BI software. Right? So there is some company that makes this BI software, and they got access basically to their client list, and they sent out a survey, and these people filled out the survey, they brought it in, and they analyzed it. Okay? Now, last time I taught this, somebody was in the room, right, who had actually conducted a similar survey for Miklos using, I think, Caseware. All right? And that paper was kicking around, and they didn't know how to write it up or what to do about it, right? And what struck me was what they had done was identical to this, right? So I don't know what this company was, but whatever this company was, they sent a survey out, right? Okay, and that paper based on that survey is in Accounting Review, all right? Why? Because they know how to play this game, right? If you just said, I did a survey, say, who cares about a survey, right? It's low quality data, it's self-selected, it's all from one vendor, what generalizability and so on, right? But they don't even mention this, the pages and pages into the paper, right? Before that, they have laid out in excruciating detail all these psychological theories and studies and use language like absorptive capacity and so on. In other words, they frame this survey as simply a means towards an end, which is studying this sophisticated topic of absorptive capacity and so on. And they can do that because not only are they very good at doing research and surveys and all that, but they really know this literature, this behavioral literature, which enables them to pick out these theories and frame this, what they're doing in this very sophisticated sounding absorptive. Again, I'm not saying that it's bad, I'm sure it's very good. But I'm just saying that that's the reason they published the Accounting Review, right? Because they knew how to frame it in a way that made it seem very sophisticated and relevant and interesting and important, all right? While somebody else could do exactly the same survey and never be able to publish it at all, because they can't sell it in a way that makes sense, all right? So this is what you got to learn how to do, right? Okay, there's nothing wrong with it. It's not bad. Right? On the contrary, right? What is the point of doing a survey and having no idea what questions to ask, what you want to do with it, right? Okay, now, it's it's interesting to wonder whether they wrote the survey before or after they came up with the theory, right? Obviously, in theory, you're supposed to do it before, right? I mean, after. I mean, you come up with a theory and say, to test this theory, I'm going to ask these questions, right? Okay. Sometimes a little footnote that will say, well, this survey is actually written by the vendor, right? And so I have to interpret the question as giving me information on this thing I'm interested in, right? But sometimes you have to make compromises like that. Okay? Alright, so this is a survey-based method, while the previous one was an experiment. Alright? Now, these people in Australia do a lot of this kind of work. So here's a paper by Carly Dowling, also accounting review. Alright, and she's looking at auditing. Okay. Once again, no, it's auditing, there's no mention of AIS here in the keywords. Alright. Okay, so what does she do? Right, this I believe is also a survey. Right. Here, right? Here's the theory section, right? And here is another well-established research area in behavioral, right? In psychology. This idea of planned behavior. Okay? And she can quote chapter and verse of the various papers in this Argent 1991 and so on and so forth, right? Okay? In other words, it is not just saying, oh, it'll be interesting to see what this does, right? They can frame this theory in a way that is adapted from this Argent 1991. Let's see who Argent 1991 is. Right? Okay? The theory of planned behavior, organizational behavior, and human tissue growth. I believe this is an A journal in psychology, right? So in other words, they are aware of these theories, right? And so it gives legitimacy to what they do, right? They can cite this other literature out there that is of real interest, and you're bringing that into this particular context. All right, so they cite these theories. I mean, one thing, if you go look at these papers later on, right, and ask, each of these papers looks at some aspect of behavior to do with auditors or whoever, right? And say, what's the underlying theory? Every single one is different, right? It's not like here's a theory which they test over and over again. No, every time they do a survey, every time they do an experiment, some other person's theory is being tested. Right? That's really interesting, right? I mean, you might be a little cynical about that, but what it shows is there's a theory out there for almost anything you want to do, right? As long as you know where to go look for it. Okay, and so these people spend a lot of time studying this literature to make sure they know that they have heard of an Argent 1991. If you never heard of it, obviously then you can't use it to frame your paper. Okay, so you really have to know these disciplines out there, right? And so what does this person do, right? I believe they do what data they use. Here, this is the data here, right? Okay, so this is actually, I think, like a field-based, survey. Right, so they do survey. Right? Respond to the instrument with sealed envelopes. All right, so but with this kind of research, getting published in these top journals, right? You will see if you look at this, right, that every question they ask, they will cite, right, that somebody else had used a similar question and it's been validated, and it's been published. Somebody has published it, right? So I'm not inventing it. Right, it's been used already to study this topic and so on, right? So you really build up legitimacy for what you're doing. Okay, that's really important. You want to get into these A journals. You can't just say, I thought of it off my head, right? Because it seemed a good idea at the time. All right, you've got to explain why you're doing what you're doing, and preferably say, I'm doing it because somebody else has done it, and that was published in a journal, so it proves that it was right. Okay, something like that. All right, so this person does a survey. You can see I surveyed 1,917 auditors. I got 569 respondents. Okay, and then what they do is, when you have these kinds of models with these arrows going in all directions, right? They do this thing called this. Look at this right here, the results. Right? This is based on something called structural equation model. Right? Somewhere here they talk about structural equation modeling. This is a very common tool that people like Sutton and these characters use, right? Look at this, right? Look at the amount of hypotheses, okay? Right? 10 hypotheses, all right? With all these little arrows here and going there. So what they're saying is that their survey instrument has questions on each one of these little, that they can interpret as measuring each one of these little bubbles, all right? Each one of these variables. And then they use the structural equation modeling methodology, which is a probability-based regression kind of thing, test each one of these. Okay? And if you read the papers by Sutton and all these people, this group, right? Amazingly, every single hypothesis is supported. All right? And I remember once somebody presented a paper here, which was like 45 of these lengths. And every single one was significant. Right? And I asked them, purely by random chance alone, one of these must be non-significant, right? Just by the law of large numbers. But no, right? It makes you wonder, was this diagram drawn before or after you ran the regression, right? That's just being cynical. But you do have to wonder, right? Because if you get every single one, what a great theory, right? I mean, every hypothesis is supported. But that's very common in this literature, right? Okay, and again, I don't know enough about structural equation modeling to know whether that's legitimate or not. But it is amazing to me how many, especially, like I said, this is 10 hypotheses, but you could have 20, 30, 40 hypotheses, right? All lines going in all directions, backwards, forward, sideways, right? But anyway, if you want to do this kind of research, not only must you know the underlying theory well, you've got to study this structural equation model, and I presume classes offered in that methodology and so, right? Okay, all right, let's just go quickly here. So here's another paper by Downing et al. All right, this is in contemporary accounting research. So that's not the same level. It's like an A minus paper. All right, and this paper actually was one that Steve Sutton cited. All right. Okay, so let's see what they do here. All right, this I believe is an experiment. All right. But this is an interview and archival method. So this is like a case interview, right? So we collected archival interview data from audit in a Big Four firm and applied a new audit system. All right, so the AIS part of this is that this audit company put in place a technology system, right? Like an expert system for auditing. And so they went and did studies using interviews and so on about what the reaction was and so on. All right. Now anyone can do that kind of research. All right. But it's very hard to publish that kind of research. They say this is how many interviews. Let's have a look. Right. How many interviews they did? Okay. They did 17 interviews and looked at 14 documents. Right. They might say that's not a great deal, right? Okay. But again, it's how you frame what you do. All right. That matters. Okay. And if you look at the theory section, I think you will find they mentioned theory here somewhere. Right, the rationale. The theory. All right? Right? We use Adler and Boris's 1996 formalization to structure analysis. Right? Never mind that other fellow, right? So now it's another theory that they follow. Now, what's interesting in these kinds of papers is they don't say here, the next sentence is, and here's why we chose this framework, and here's what the alternate frameworks might have been. They never say that, right? So, I'm very curious now, how did they choose this, right? Is this the only theory that could have been used here, right? Who knows, right? They just say, full stop, they used it, end of discussion. All right, but if you were trying to do this in a dissertation, hopefully your advisor would say, where did this come from, right? How did you decide to use this theory as opposed to Joe Blow's theory or whatever, right? Okay, but in any case, they don't do that. But again, they really know how to do this, right? So they use that theory and then they do this analysis and get published in a top journal, right? So again, all I'm saying is that I'm not saying that these are bad papers, right? What I'm saying is that you have to know how to write them up in order to publish in a journal. right? You have to really be good at what you're doing, methodology-wise, especially if you're going into a cross-discipline like capital markets, like Vern is doing. You have to be as good as a person who only does capital markets, right? Or else you get a co-author who really is that good, right? Okay, and you have to frame it, right? The difference between a paper published in a journal and one does not publish at all is not necessarily that the data is better, but that, like that survey, they know how to frame it in such a way that the fact that what you did was a survey is of secondary importance compared to the value of what you're trying to measure. Some theory that is really interesting and important and so on. All right, you got to have that whole package if you're going to get published in one of these A journals. And you can do that even with AIS, as you have seen. There's a variety, there's many different strategies you can use, all right? But at the bottom of it all, you really have to know what you're doing. I think that's all the papers that I have here, right? So these are all the papers published recently. But let me just talk about this one to finish off. Okay? Right? Now this paper, right, which is really done by this lady here, Anita Young. This was a dissertation, right? This, you might say, is the first true AIS paper ever published in accounting in 20 years, right? Meaning that this is real technology, right? This is one of these kind of normally kind of papers, right? But it's not really normal, I'll explain in a moment, right? Where you take a tool that has been developed outside accounting, right? There's a whole discipline out there, tons and hundreds of researchers who are working on this tool called process mining, all right? And applied it to auditing, all right? So what is process mining? What process mining does, it looks at the computer system, like for example, the computer system that is in this computer, right? Microsoft Windows operating system, right? And this operating system is maintaining data, right? So it records somewhere in here, right, when it was turned on, who turned it on, if it required a login, and so on, right? Now, normally you don't ever see this data, but that data is in there, right? And in particular, an ERP system records this data in enormous numbers, all right? So if you want to log into, say, the Rutgers, what do you call it, the RAD system, all right? You have to put in your unique user code and password, all right, to get into Blackboard. All right, and there's a log out there that says, you logged into Blackboard on this particular site with this login, right, and so on, okay? And in theory, you could go and extract this log from a SAP system or whatever, or from the Windows system and so on. Now, this is actually much harder to do than it might sound, right? It's extremely difficult to extract this data in any meaningful form, but if you do, you get what's called an event log. All right, which says this is what happened when, okay, and you can use that information to do, you can analyze these logs, right, to get information. All right, like what? Okay, so this particular paper looks at the purchase to pay cycle, right, in a bank, right? But anyways. Right, so what they did was, okay, I say they, because maybe it was this big guy was doing it, right? What she did was she looked at all the purchase orders all the payments that were made by this bank, right, in January 2007. Okay. Right, so this translates all the invoices paid during the month of January 2007, right? So we look, what they do is they say, here's January 2007, right? And you look at all the payments made, right? By the supply department or whatever it was of this bank, all right, in January 2007. And then you trace back to when these transactions began. They began with somebody filling an order saying, I want to buy 1,000 reams of paper or something. All right? Okay, so that's the start of the transaction, which ended in January 2007. All right? And this information is there, right? That it's there in the general ledger. Right? You don't need to go to event log to get this information. All right? But what the event log tells you is, when did those steps take place? All right? So this is the way the process is supposed to happen in this bank. Okay? So somebody creates a purchase order saying, I want to buy paper, let's say, photocopy paper, right? A case of photocopy paper, right? So, say Jackie creates this, right? And then a supervisor, like say Dan, would sign it saying, yes, you can go ahead and place this order, right? And then that is released, right, through some system, either mail or presumably online. It goes to, say, Staples, right? The order is placed, right? And at some point, right, you get the order is delivered to the loading dock downstairs, right? At which point you get the good receipt and the invoice receipt, right? And this is triple matching, so you match the two, right? Staples provides an invoice saying, I have provided 1,000, I have provided, say, 10 cases of paper, and you compare it against the purchase order, which says Jackie ordered 10 cases of paper. They match, right? The price match, right? And say, fine, the order has been fulfilled, and then the payment is made, right? So this is the way the system is supposed to work at this bank, all right? Now, every time one of these activities take place, that signs the paper or it's received at the loading dock or whatever, the computer is recording, all right, what time did this take place and who was responsible, all right? That's the information you get from this event log, right? And the nice thing is, this is done by the computer, right? So it's not somebody who is signing in saying, I received so many orders at this time, right? They can say whatever they want. The computer is recording what actually took place, right? Because they can't access the internal workings of the SAP system, right? Those logs are secure. So it's a source of information that is secure and outside the control of the person you're trying to audit, all right? And so what you can do is, you can take that information and ask, okay, for all these payments that were made in 2007, did they follow these steps in this order? Right? That's worth doing for an auditor. Okay? But it turns, so in other words, every transaction is supposed to follow this process. And this process only. Right? Now, in theory, you could lock it. So you say nothing can happen unless it follows exactly these 6 steps in this order. But in practice, that's not the way the world works, right? In practice, right, people can get around this, right? Either intentionally or otherwise, right? So, for example, it goes to Dan to sign, and he says, "Hey, Jackie, you said you wanted 10 reams of paper, but in fact, you filled it out for 100, right? You made a mistake. Please change it, all right?" Or Dan says, please add, photocopying ink or something to the order too, right, in the same order and so on. So, there can be changes like that. All kinds of things can happen between here and there. In practice, that in theory don't happen, right? So what the process mining does is tell you what the process actually looks like, okay? And this is something they found, right? Well, remember, they were supposed to, all these supposed to take place one at a time, one after the other, all right? But you can see here, right, that for every purchase order, there were 26,000 purchase orders created, only 25,640 of them were signed, right? They were released, more of them were released, right? There were 31,000 payment activities, even though there were only 26,000 purchase orders created. There were 15,000 times they were changed, right? So already you can see that system is not working strictly according to theory, okay? And as they say, some deviations are normal, some are suboptimal, and some are anomalous that auditors should check. The question is, well, which ones are which, right? And here's the, how do you see this? right? So here there are 6 variations here, all right? In fact, there is something like 250 different ways these purchase orders were paid, right? So instead of one that is supposed to take place, there were 250 of them, and here are 6 of them, the top 6, right? So you can see the top 3 here alone account for about 80% of all processes, right? So here's number 1. This is the correct one, right? Create, sign, release, goods received, invoice receipt, payment, right? But there's various other ones. So for example here, create, purchase order, release, right? Pay. No signature at all is taking place anywhere along that, right? And so on, all right? Okay, so this is what the process mining shows. It shows what the reality is compared to what it's supposed to be. Okay, and in another, this Mika was actually a practicing accountant. She did it for some other company, and instead of 1, she found something like 5,000 different processes, right? All manner of variations of what could happen, right? And some of these are fine, some are not, right? So for example, there are some here, right, which is exactly the same as the correct one, except there is no goods received. And when they examined that, it turned out that these were digital downloads. So obviously, if it's a digital download, nothing is being delivered to your dock, so there's no goods received, right? So that was fine. It may have been fine, who knows, right? But at least there's an explanation for it. Anyway, the point I'm making here is that this is a tool that enables you to do this kind of analysis, right? Okay. Just want to finish with this. Okay, so there were 304 actually variants that of this process that we found. All right, 3 of them account for 80% of the data set. Right, there's 104 variants that occur only once. All right, and that table showed the top 6. Okay, and now this raises a question, right, that we discussed right earlier with Hussein. Okay, if you are an auditor and you are asked, which of these 304 variations you should look at, which ones should you look at? All right, should you look at the top 6 that was shown in that table that account for like 95% of all the transactions? All right, or should you look at these 104 variants that only occur once? Which one is the outlier according to the standard? Right, now in this paper we looked at the top 6 only, and we ignored these, saying, well, they only occurred once, the amount of money involved was very low, and so on. But that's a judgment call, right? Who knows if that was the right judgment, right? It may be the case that the auditor should have looked at these, right? Maybe this is where maybe fraud was taking place here. Who knows, right? Again, that's the problem, right? Nobody knows, right? Which one is the one we should be doing, all right? Okay, and so on. Anyway, I just want to show you this. Now, you may ask, how was this published in Accounting Review? With extreme difficulty, all right? With tremendous difficulty, and only because Bernd Richardson was associated, right? So, that's a good sign. It shows that the powers that be at the Accounting Review were aware of the fact that they needed to broaden their base of papers. So they can't all be capital market research. So they hired this Bernd expressly to be able to have an expert in AIS, and he was willing to push the paper through. But it took a long time, right? And again, why, what was the selling point? The selling point was that this was the first time anybody had brought process mining into auditing, and that it wasn't just saying, oh, it's a good idea to do process mining, right? It'll add value to auditing, a purely normative paper, right? Actually applied it to real data, all right? That was what finally got it just over there. But it was very difficult. I mean, and many times the referees would say, this is some technology, who cares? All right? Because of course the problem is the referees themselves don't know what process mining is, right? So how are they to evaluate whether it's the right thing to do or not, right? So it's not difficult. But the point is, you can publish in A journals, right? It's easier now, especially Accounting Review. You will note, by the way, there is no in that list, no JAR, no JE, right? They have not changed, right? They have not published any technology paper as far as I know. Now maybe that JAR might publish XPRL because last year they had a conference on XPRL, right? I don't know what the outcome of that was or what was published, but I suspect those were capital market researchers looking at XPRL, right? Not AIS people looking at XPRL, right? But I don't know who was there at that conference. Nobody that I know of, right? In any case, but those journals are still very, very difficult to get in. But at least with the accounting review, there is a right. But generally speaking, what I want to take away from this is understand what it takes to publish, right? In this journal, it can be done, but you have to be really good, not just the technology, but in the subject area to which you apply it, right? You cannot just say, I'm a great big data analyst, right? Publish me, right? That's not going to work because we're an applied field, we're in accounting, right? So you have to show that you are actually good at accounting first and foremost, right? And the same is true, obviously, when you go on the job market, right? When you go on the job market, if your paper is on process mining or whatever it is, right? Remember, the people hiring you are not AIS, right? There's only like 3 departments in the whole world that do AIS, right? So if you go to apply for a job in some other university, probably, if you're lucky, one person there is in AIS. Most of the time, the median is probably 0, right? So you have to sell yourself as an accounting professor, right? Who does or who knows AIS or who can teach AIS, right? You can't say, I don't care about you capital market people, you're all fools, right? The only people who can judge me are my fellow AIS faculty, all right? If you have that attitude, they're going to say, screw you, right? Okay, so you've got to be very clear that even if you're an AIS, you have come across on the job market as accounting faculty. Okay, so that's the people who will be hiring you. All right, and you have to publish in the top accounting journals to get in, right? At least a couple of papers. Okay, all right. Anyway, hope you found that useful. Dave Bond will talk about XPRL next week. Okay, thank you. Any questions, please?